Simple visual analysis allows the candlestick investor to kind of assess what type of trend the markets are in. Today the Dow is down about 104 points, but note that it used the T-line as a support at the low end and closed as a doji. So even though it was down 100 points, it showed you there wasn't any real decisive selling. It was an indecisive trading day. Add that to the fact that it stayed above the T-line, still provides the implication that the uptrend remains in progress. The same analysis can be seen in the NASDAQ, that it opened lower and it traded higher. Even though it wasn't very high today, up 6 points, it was trading well above where it opened. That pretty much tells you that once the market opened, bulls were still participating in the market. It also is illustrating that the T-line has still not been breached. There's still a possibility of kind of a T-line crunch pushing the next wave up through the 200-day moving average. And with the transportation index trading stronger most of the day, that's a simple analysis that if the transportation index is trading positive, the Dow is trading negative, and the S&P 500 and the NASDAQ are trading relatively flat, there isn't any real major change of the trend. It's investor sentiment just shifting from sector to sector. Knowing that the overall market is not changing, it allows the candlestick investor to analyze the strong reversal signals. Our recommendation on SFIX was based upon a Morningstar signal. Number one. Number two, look where it's supported, right smack dab off the 50-day moving average. Number three, it closed above the T-line. The next couple of days it was followed by a doji sandwich. This combination of a Morningstar signal followed by a doji sandwich, the morning sandwich we call a McMuffin. So even though it started off soft today, you stayed long in SFIX because of this information right here, that there's probably a good strong uptrend. And as we saw, SFIX finally finished up positive on the day, right at the breakout level. So adding 2 plus 2, which is a strong reversal signal supporting off the 50, we can pretty much analyze that if this is wave 1, the J-hook going into wave 3 should still have strong upside potential. That same analysis alerts an investor that if we see that Morningstar signal doji sandwich McMuffin in PETQ, that even though it didn't execute today because of a lower open, you still keep this on your watch list because the next strong buying is going to continue this uptrend, also providing a wave 1, wave 2, going into wave 3 of a J-hook pattern. So even though it doesn't execute right away, it still has the investor prepared to be buying on the first signs of new strength coming back into that trend. Our recommendation last week on FET was based upon the kicker signal. Again, the kicker signal breaking out through the 50, kind of confirming your fry pan bottom. And how long do we stay in this strong move? As long as it doesn't close back below the T-line. The kicker signal by itself is a very strong signal. The fact that we can put other evidence, like a breakout through the 50, which is also confirming the fry pan bottom, just enhances the probabilities that you're going to be in an uptrend. That same scenario makes OMER, O-M-E-R, a potential buy tomorrow based upon the kicker signal that broke out through this little downtrending resistance level and breaking out of this flat trading range, giving you the prospects that something major has happened. The kicker signal is the strongest of the individual candlestick signals, telling you there's probably going to be a lot more upside. This type of information is what allows the candlestick investor to be participating in strong price moves in a slow-moving market. That'll be it. We'll see you in the chat rooms.